Welcome everybody to the Apex Sniper Bootcamp tutorials, and this is session 2 here of the tutorial. As always, anytime we talk about trading or trading any kind of financial instrument, we got to throw up the disclosures and risk disclosures here. So Bootcamp tutorial series, what is it all about? Well, if you were on session 1, you know that this is mainly geared for new traders and those of you that are Bootcamp trial members. Obviously, anybody that wants to can be on the the tutorials. You don't have to be new or in trials, but this is not going to be next level advanced trading. All right, we're going to try to help Bootcamp be simple and not overwhelming. We've done some basic walkthroughs of Bootcamp, how to make the most of it. Some of you are at different stages, but we're kind of approaching this as if you're in your first week. Some of this might be repetitive for you guys that have been around for a little while, but we're kind of starting with the basics here, okay? And please hold your questions to the end, and let's keep any questions, focused on what it is we're covering. We're not going to be talking about Lilu or, the semi-automation trading. This is just focusing today about the basics. And mainly today, we're going to be focusing on charts and order prints. Now, if you are new and let's say you missed the first session, like I said, we're not gonna take a lot of time to review it here. We're gonna dive right in. What you can do is go to the website and go right here to the Sniper Bootcamp training page. We have added a section, and I want to let you guys know where that is so you know where these tutorial recordings will be. If you scroll down all the way to the bottom here, okay, they're right here. Tutorials. If you're in your Bootcamp trials, feeling overwhelmed, click that. Bootcamp tutorial 1, the one we did on Monday, is right here. And last night's webinar is there as well, that Daryl did. And then this recording will be right here. So this is where they will be moving forward. And again, for any of you that might have missed the first session here. And you'll see in there what we're trying to do here is what we call raise the grade. Depending on where you would grade yourself right now, A, B, C, or D, or maybe even, E or F as far as trading. How far along have you come? How many videos have you watched? Our goal through this tutorial is to kind of help you through it all and get you to a B grade by the end of the tutorial series. All right, it's in your hands to get yourself to an A. Only you can do that. Only you can take what we're given here to you and take it to the next level. So in session 1, we had some assignments, right? We watched the enhanced Xbox trade video. Make sure you've got a Ninja installed and get your charts up and going. Be in the elite room and watching that section of understanding chart overview and basics. All right, how did you guys do on those? For those of you that are on session 1, how did y'all do with those assignments? Were y'all able to get through those? Get everything done, get the charts and everything set up, get through those videos there. Okay, got a lot of people saying yes, all done, halfway, over 10 hours just of videos. Awesome, Randy. Yep, that's 2 days of homework. It was quite a bit of stuff. Doug says, I picked up a few tips on the charts overview that I missed the first time I saw that. Guys, you're going to see that happen. The first time you dig into some of those videos, it's very overwhelming, isn't it? I can admit that to you, even though we're always telling you, hey, go to the videos, go to the videos. I mean, we spent hours and hours making these step-by-step training videos for you, but I understand it's a lot, especially that first time you go through it. It's like, what? What's going on? And when you go back through a second time, okay, you pick up on some tips. Things do make a little more sense, okay? So one of the first things was to get in the elite room, okay? And just real quick, I want to make sure that everybody, once again knows that that's right here under step number 5. All right, this shows you how to get in the elite room, gives you some tips, lets you know how to, access the room, how to use it, what to expect, and if you're having any issues tech-wise, how to get assistance there. Okay, so hopefully you're in there. Now, guys, do not spend all day in that room. Okay, yes, you need to be in that room every day. Yes, be in there in the mornings. when Daryl and Lori are calling out trades and talking about the market, they are teaching, they are answering questions, okay? Be in there in the mornings, take advantage of that, but don't sit in there all day. You need to be, following these assignments. You need to be studying, you need to be checking out videos, doing some back testing, really digging in, okay? Not just sitting in that room all day and not just demo trading all day. You need to learn as well. Installing Ninja in charts. All right, we went through that section. We went through how to just, take a deep breath and go through each section at a time. I'm going to post right now in the chat box here. Okay, boom, there it is. I just sent it out to everyone. If you're having any issues with Ninja, there's some troubleshooting steps on the page. I just shot you the YouTube link for a troubleshooting videos. 95% of any issues you have with Ninja, what we found is it's normally kind of 5 different things. But the top 5 reasons you're having an issue with Ninja, and it's just normally one little step you missed or one little button, okay? I walk through it in that troubleshooting video there. So I want to make sure you have that. If there's anything there that you need to check out or troubleshoot, you have it right there, okay? Again, you've got to get those charts on your computer. That's your life and blood. Go through the course. You've got the white glove option and the troubleshooting video option there as well. So we talked about watching the enhanced Xbox trade video and watching the videos under understanding chart overview and basics. This helps you understand what is all this stuff on the chart. How do I operate the charts? What is all this order print stuff, right? And you'll see that both of those videos will make more sense after you've watched them both, right? If you watch the enhanced Xbox trade, you're kind of like, but then when you watch the overviews, you're like, okay, now I understand what those order print things are. Okay, you can't really watch one without the other. And you really have to understand order prints is the apex edge. It is our secret weapon. If you don't understand order prints, the power of it, the importance of it, the requirement of it, you'll never succeed or understand in the sniper system. Okay, that's what it's all about, and that's what I'm going to spend most of our time on today here is order prints and what are these things on your chart, and really helping you to understand what it's all about. And I always use this analogy, flashcards versus learning general math, right? Remember when you were a kid in school and you went through flashcards, 1 plus 0 is 1, 1 plus 1 is 2, and you memorize those and you learn those. You learn to go through them real quick, right? And you go through 2 plus 0 is 2, 2 plus, got it. But then suddenly someone throws out, what's 3 plus 4? Well, I don't know. I haven't memorized those step-by-step flashcards yet. Okay? Well, if you learn and if you know general math or how to do addition, right? If you understand how to do it, then you can do any flashcard, right? You're not going to get tripped up on, oh, well, I didn't learn that particular one. I didn't memorize that particular one, okay? And that's how I want to approach this a little bit here is if I can get you to understand what's really behind order prints and what's really behind sniper, all this other stuff comes so much easier as opposed to you just trying to remember every little step. Okay, we'll get into those steps. We're big on those steps. We train on those steps. We talked to you about writing those steps down in front of you. But if you really get what I'm teaching you here today, it will really make a big difference. But I want to stop you for a minute. I want to burst your bubble for a minute, and I want to give you a little bit of a wake-up call. Okay? You've probably heard us talk about the 90-90-90, right? In some of the videos. That 90% of new retail traders blow 90% of their trading account in their first 90 days. Now that's a sad reality of the retail trading business, but did you realize that was the industry that you're getting into? You're new to trading, you're checking out Bootcamp, you're all excited about trading, but have you realized that is the industry you just chose to get into? Like, you're into this world And do you realize that 90% of people that get in this world fail? How many of you have done that already? Okay. How many of you have done that already in the past? How many of you have traded in the past before and you've lost 90% of your trading account in your first 90 days? Me. I have, yep, on and off for years, right here. That is the industry you're in. And I don't say that to make you negative. I don't say that to scare you. I say that because you got to realize that's what you just walked into. And then you need to ask yourself, why the hell did I do that? You know what I mean? Like, what am I getting into here? And so the first thing before you do anything, yeah, Perry's like, hey, it's harder than I thought. Yep. I could have bought a, Aaron says, I could have bought a nice Lexus with the accounts I've blown over the years. Exactly. Same here. Okay, when I first started, I thought I knew everything. I just want to get in and start pressing buttons. I thought I would be smarter than everyone else. But this is not a sales pitch. This is a fact. Google it, research it, look it up. This is how the industry works. So before you think about anything, what you need to focus on, the very first thing you should focus on is to say, hey, why is that? Okay, I'm getting into an industry that 90% of people fail. So why? What do they do? How do I be a part of the 10%? And how do I not be a part of the 90%? That should be the first thing you ask yourself. Not, oh, just teach me how to enter this trade and press a button. That's the wrong question. That's the wrong focus. You got to stop and say, why the hell am I doing this? And what am I going to do different, right? But you think, I don't need to do that. I'm different. I'm special. I can figure this out. I'm smarter than everyone else. I'm smarter than the market or the big boys, the market movers, the big institutions. That won't happen to me. Those bad things and losing accounts, those happen to other people, not me. I'll find a way. I'll figure out some holy grail and make $1 million. I'm so special that out of the millions and millions of people that have tried trading, out of the tons and tons of banks and institutions and investment companies and people with degrees and people with years of experience, out of all these hundreds of indicators that are out there, I'm so special that I'm going to just open a chart and in 3 days, I'm going to just find some special indicator that just works. I'm different. I'm special, right? And you're going to spend years of your life testing and back testing random indicators. There has to be an easy setup. These people that really study the markets and understand the markets and how they work, and they understand levels and behind the scenes, that's just too much work. I don't want to do that. There has to be an easy setup. There's got to be some indicator that's magic. And it just works. And I can take every single trade. Right? And that's how I'm going to do it. I don't need to learn how the markets work and levels and volume. And I don't need to worry about risk management and psychology. I'm going to be different. I'm going to just sit here and I'm going to figure out, and I'm going to go through every random indicator I can find free in NinjaTrader and anywhere else, and I'm going to find one that works. And I'm going to find one that, oh, look, this one happened to work when this crossed over this thing, and that was a good trade. But I'm not going to realize, oh, well, here it told me to go down, and then here it told me to go up, and here it told me to go, and here it told me to go up, but then it went down. And here, well, crap. Well, maybe if I add 3 more indicators to it, and all I got to do is look and say, if this happens and this happens and this happens, I press a button. I don't want to work. I don't want to read. And oh yeah, I can just fully automate something and just say, if this and this happens, just let it go. And it's just going to print money for me. Guys, you know why I'm harping on this? I've done it. Yeah, people are like, wow, were you watching over my shoulder? Guys, I've done it. I wasted years of my life watching random YouTube videos of this is the Holy Grail, put this crossover and this crossover, and you're just getting smacked left and right. Oh, it says go up. What? No, it went down. And go down. No, it went. Oh, gee. Smack, smack, smack. Because I knew there was some way to just find an easy something that would work, and I could just kick back, press a few buttons, not invest any time, make millions of dollars. 90% of new traders think this way. 90% of new traders don't want to invest time into themselves and learn. 90% of new traders think, that's supposed to be think some random sales pitch video on YouTube is the Holy Grail and fall for those videos with, hey guys, check out this big mansion I live in and all my cars and boats and out there with these women and vacations and cash. And guys, come on. How many of you have watched one of those videos and you ordered that course? And you spent money on some guy flashing around all this. It's so easy and all you got to do is trade this and just slap this on. Don't be lying to me. You've done it. You've done it, right? And did it work? No. I've done it. I'll admit it. Years back, I did it, and it was a waste, right? 90% of people fall for that. 90% of people think, well, if I just add one more indicator, then I could just blindly take every trade without having to learn or read the markets. 90% of people think this way, and guess what? 90% of them lose 90% of their money in the first 90 days. Right? If you don't want to follow the 90%, then don't do what 90% of people are doing. I mean, that's just common sense, right? If it was that simple to slap something on and make $1 million, would you be here on this webinar right now? No. If it was that simple to slap on some indicator and just press a button and trade, would you have any financial issues right now? Would you have any financial stress right now? Would you be making a house payment, a car payment, or would you have paid for it all and be on a beach somewhere? Right? Yeah, Doug would be on his yacht. That's not how it works. Don't fool yourself. Grow up, be mature, look at this properly, and say, okay, I don't really believe in that. If something's too good to be true, it probably is, right? You've all fallen for it. You've all thought this way before, okay? So don't you think you need to figure out why the 90% fail if you want to even attempt to be in this industry and do something different, okay? So that's kind of where I want to set you up here. And it might not be what some of you want to hear. Some of you might have wanted you thought Apex and Bootcamp and training and these tutorials are going to be just some holy grail, 1, 2, 3, ABC, look for this, press a button and make all this money. I'm sorry, but it's not like that. There's more to it. Okay, you have to understand this industry, understand how the market works, be a sponge and absorb it, and don't rely on these random things and these lagging indicators. So what are indicators? Okay, well, indicators are lagging. It's telling you what the market has done versus what it's doing now. And guys, listen to this. Indicators do not drive the market. Why did that trade fail? My indicator said. Your indicator itself doesn't mean jack. You think the market cares about what your indicator wants it to do or says it has done? Orders and volume drive the market, not your indicators. Stop trying to make the market fit into what you want it to. Stop trying to make the world financial market fit around some indicator. You have to learn to follow the market. I mean, that chart I was showing a minute ago, just slapping some random things on, you know? I mean, look here. Let me explain something real quick here. I mean, look right here. Okay, you know, this says, oh, we're going up now. Why does it say that? Well, because an indicator is lagging. It's looking back at what the last X number of bars have done. It's not telling you ahead of time. It's not telling you right now. It's telling you what it has done, right? Or over here, see? Okay, now I'll go short. Let me ask you a question. For those of you that do understand the TX trade, the trapped X box trade, if this had been a trapped X box right here, right? We had this last bar up, then we have a reversal bar down. Let's say this was a trapped X box. Where would we have gotten into this trade? Right here, right? A tick below that reversal bar. And then we got one more bar, and we're out with profit. Correct? Everybody understand that? This is a reversal bar. We'd have got in here. One bar, we're out with profit, right? What about those other people that aren't even getting in until after this thing switches? Right? What about here? Going up, well, maybe we're going down, we're going up. That's the other big difference. When you're waiting on these lagging indicators, okay, that are just chopping out like crazy, you know, oh wait, we're going down, oh wait, no, we're going up, wait, it crossed down, wait, crossed up, wait, crossed down, wait. You're just getting chopped everywhere, okay? Indicators are lagging because they're telling you what has already happened. We would have already been out with our profit, right? Does that make sense? We'd already been out with our profit before other people are even getting in. Do you see that difference right there? Does that make sense? Most of the time, the 10% of successful traders are already in and out with profit before the 90% ever get in. Do you see why? Okay? Because you're relying on something that's lagging and chopping you back and forth. Okay? And those were some examples there. We're out with profit before most ever get in. It's kind of like you're driving and you're taking the next turn when Google Maps told you to turn back there. Google says turn here. No, I'm going to wait and take a next turn. You're never going to get to where you're going. You're always going to be late. Does that make sense? Google says turn right, you wait and turn right the next one. Now they say, well, turn back around, you wait and turn around. You're just going in circles. Okay? So we want you to have a clear vision of how the market really works, understanding levels, momentum, exhaustion. Don't fight the market. You're not smarter than the market. You think you are. We all think we are at some point. We're not smarter than the market. Without a clear vision of what's going on, it's like you're driving down the highway at 70 miles an hour with a blindfold on. You're just flying down the highway, literally blind. You know, you're new to a city, you don't have any Google Maps, and you're downtown just taking every left, every right. You're running into roadblocks, construction, traffic, one-way street. You're just bumping your head, and you feel like you're going in circles. Anyone ever felt that way about their trading in the past? Does anyone still feel that way about their trading? As opposed to a clear vision, clear path, following Google Maps, helping you avoid all those roadblocks and constructions, you just feel like you're going in circles. So I want you to change your mindset. It's not fun to realize that. It's not fun to have to change your mindset and realize trading's not going to be as simple as pressing a button when I get an arrow and making $1 million. It's not fun to accept that and realize you have to stop, learn, understand how the market works, and put in a little work to it. It's a little bit of busting your bubble to realize I've got to change and put in work. But it's also not fun to lose money and blow your account, is it? No. So you've got a choice, one way or the other there, right? It's also not fun to be part of the 90% that fail. So again, it's up to you. It's your choice to go one way or the other. So, most important thing. This will be the most important lesson I can ever teach you about Bootcamp. Next to, you know, money management and keeping your risk in line. But if you get this part we're about to cover here, it will turn your trading around and open up your eyes. Okay? You will have an entire different view of Sniper and Bootcamp and trading in general. So we're going to jump right into order prints here. And I always call it the magnifying glass. Order prints are your magnifying glass into the bars and into the market. It's not just a list of numbers, but we have formulas and symbols that tell us what's happening behind the scenes and what to look for. Regular order flow is just a bunch of confusing numbers. We put algorithms in it to help interpret it for you, and I'm going to show you what I mean by that. But order prints is the true Apex edge. That's why you're here at Apex. Okay, this is the whole point of being here. All right, and if you don't understand the power of order prints, you won't get anywhere here. So on your sniper chart, this is a sniper chart view of order prints. Okay, on your sniper template that you have in the toolkit, we have it customized and it shows you certain things about order prints, right? Okay, we understand that, this right here is a paw print. We understand that this is a cluster. Right here, what is this? This box is called an exhaustion box. Okay? All right? In here is that, blue shade is trapped orders. Okay? These white right here is mini magnets. Okay? This is how they look on the sniper chart. Okay, but some of you are like, well, what are those things? I understand. Okay, that's an exhaustion box. That's a trapped order. We're looking to trade those. Well, where does this come from? Okay, well, what's behind the scenes is this right here. All right, and you can access a chart just like this. This is what order prints is behind the scenes. Basically on the bar, okay, at every price level, okay, it's showing us the number of orders that were executed. The left side of the bar is the sell orders. The right side of the bar is the buy orders. Okay, for example, at this price level right here, there was 58 orders that were sold, 24 that were bought. Okay, at every price level, there's numbers. Now, you wouldn't know what the heck to do with those numbers if you're just looking at numbers, right? The order prints algorithm takes these numbers and determines plots for them of exhaustion, absorption, paw prints, and so on. Okay, it would just be too much to have all that on your trading chart, right? So on the trading chart, we plot the main things that are needed. But this is what's behind order prints. We see inside the bars. You understand why I say magnifying glass, right? If you're just looking at a 5-minute chart, what does that tell you? It doesn't tell you much, except 5 minutes passed on a clock, right? Okay, this lets us see inside the bars and what's going on. So we're going to go through a few things here. We're just going to walk through order prints and what's printing on your chart, and then we're going to dig in deeper. So exhaustion boxes are the green or red boxes at the end of the bars showing a weak or exhausted area in price. All right, and we can see that right here. Okay, this is an exhaustion box, right? It's a red exhaustion box because this was a, because at the top here, it would show that there's exhaustion on the buy side. Okay, so this is an exhaustion box. Down here is an exhaustion box. Here is an exhaustion box. Here's a green exhaustion box. Okay, so that's what these green and red boxes are. They're exhaustion boxes. Okay, that's what they are. That's how they plot on your chart. We'll dig in more to those. Okay, here's more and more examples. There are exhaustion boxes all over, right? Okay, we'll talk about actual TX trades, but those are exhaustion boxes. That's how they're plotted on your chart. Trapped orders, they're the blue shaded price area. Okay, basically what it means is there's orders in one direction that came in strong and then got rejected. So those buyers or sellers are possibly trapped and the market went the other way. Again, I'll dig in deeper into that for you. Okay, but look right here. See all these blues? Those are trapped orders. Okay, and you see them all over. But notice here as the market's coming down, okay, See how these trapped orders are on the buy side. The blue's on the buy side. Well, people are buying here pretty heavily, but nope, the market rejects and goes down. People are buying kind of heavily, but the market rejects and goes down. Then what happens here? It switches. People see the market going down, and what do? Like, ooh, I'm going to get in and start selling. So they sell pretty deep in here, right? And then, boom, the market rejects them, goes the other way. That makes sense? So the blue, and we'll dig into that more, the blues are trapped orders. Okay. High volume clusters. It's a yellow shaded price cell. Basically means there's multiple times more volume there at that price level than there was compared to the last X number of bars. It's these clusters, these yellow things. Okay. We talk about those during the training course. You'll understand how to use some of those. It's just showing a high volume level at that main price point that is much bigger than the last X number of bars high volume levels, right? In each bar, somewhere in that bar was the highest traded price point, okay? What we call point of control. Well, when there's a cluster there, that point of control, that highest traded area in that bar was a lot more than it was the last few bars. It's just alerting you to a area of high volume, or like a fight in the market. Okay, there's a fight coming in there. There's a lot of orders coming in there. It's fighting. It's a cluster. Okay, we'll piece all some of this together. I just want you to make sure. I want to make sure you know what each one of these are. Institutional blocks or I blocks. Okay, blocks are large orders that are generally placed by institutions, not individual retail traders, right? When you see big block orders come in of 50 contracts or 200 contracts, that's probably not me or you placing 200 contracts, right? It's probably not Joe Blow next door. That's probably an institution, okay? Right? A big investor. And they're denoted by the red or green lines. For example, see this right here on your chart? Okay? Those right here, well, Drake, these are not in the DOM of potential orders that are out there. These are actually executed orders. Okay, Dave, what you're asking about, or is like fake orders in the DOM of, oh, look, I got 400 orders up here 10 ticks away trying to pull the market, spoof it. These are actual executed orders. Only actual executed orders is what shows up here on order prints. That makes sense? What you're talking about is on the DOM. So see right here, that reddish line, that was a red block, meaning there was a big sell order in there. Okay? See this green, there was a big buy order in there. A block, an institutional block order right there. See that? Okay, and that's what those are. Mini magnets are what we call MMs. They're designated by a thin cream colored line. They're a price level of rejection and attraction, meaning the market would normally push away and push off of mini magnets, but is often attracted back to them as well. Okay, now you can change the color on them, but what they look like on your plot are these white lines here. They're always at the end. When they're plotted, they're at the end of a bar, one end or the other of a bar, right there. That's a mini magnet. Okay, kind of a mini magnet hidden behind a paw there. Mini magnet. Here's a mini magnet. Here's a mini magnet. That's what those white lines are. Okay, they can be very strong levels of rejection, or where the market left orders at. It can push away and it can come back to them. Okay, so we're going to keep an eye on those. ZOI, zone of interest. It's a price level that the market likes and had a lot of participation. Suddenly at this price level, within 1 to 4, 2 to 4 price levels there, a lot of orders came in. There was interest right there. Something about that area of the market, that level, that price level, attracted people. Something's important right there. Okay, the market often returned to those, it can push off of those, it can chop around those. Zone of interest right here. See this shaded area here? ZOI, zone of interest. See this shade here? They're a little thicker because the zone of interest is not a single price level. It's a zone. So it can cover like 2 or 3 price levels. Does that make sense? So that's why they plot a little thicker. Okay, here's a ZOI. Okay, so you've got the greenish color and the purplish color. All right, here's another purplish color. Was it a buying zone of interest? Was it a selling zone of interest? But that's what those plots are on your chart. ZOI, zones of interest. Okay, is it starting to make sense, guys? Like, you're looking at this chart here, it's like, okay, those things are the ZOIs. They're zones of interest. They're, you know, a few price levels there where some interest came in. Okay, got it. I can see that. All right. Okay, these white things here, those are mini magnets. There was price rejection there. Leaving some orders there. That's a strong level. I got the white mini magnet. Okay, gotcha. All right, this green was a big institutional block. This red was a big institutional block. Okay, got it. Okay. We'll get to that. What's the red line? Joe, yes. Okay. Dave says, on the ZOIs, why do some continue right and some stop? You mean, why do they keep going to the right-hand side? Is that what you mean by that question? Because they're going to continue to plot forward to the right until they're broken. Like you see this one here. It was way back here, plotting, and then price broke through it. See that? So it's no longer going to keep plotting. If it just kept plotting to the right, Dave, you just have a million of them. You know what I mean? But they're going to stay open and plotting so that you can see them going forward. See all these lines up here? The mini magnets, the paw prints. They're still plotting there, letting you know, hey, those were plotted and set back here. These are strong levels that haven't been broken. If the market came through and shot through them, then they would no longer plot to the right. That way you can still see what is out there and what levels are still important and not broken. That makes sense? Okay. So you can kind of see these different levels. They mean different things. Okay. And they're all plotted, okay, based on what's going on inside the bar. Okay? Meaning all of these things you're seeing plotted here, they're all based on this, of what's going on inside these bars. All these numbers inside of the bars, the numbers of orders that were sold, the number of orders that were bought, and then our algorithms go in and interpret that to be like there was exhaustion there was absorption in orders there was a big drop off or rejection in orders there. Okay, does that make sense? So you get to see this magnifying glass behind the scenes of, hey, there's important things going on in the background. There's important levels in the background. And what is 90% of people out there trading? This chart right here with a million indicators on it and just blank naked bars. Do you get where I'm coming from a little more now when I talk about if you don't have order prints, it's like you're driving down the highway at 70 miles an hour with a blindfold on. You're blind. You have no idea what's around you. You have no idea what's in front of you or behind you. It's like driving down the highway, putting on your blinker to get into the next lane. Anybody can put on a blinker and swerve into the next lane, but what's over there? Are you going to hit something? Should you? It's easy to put on a blinker and turn a steering wheel. You can, but should you? It's just like you can place an order and hit enter on a chart, but should you? Right? Often it's more about knowing when not to. Okay. Now, let's talk about paw prints. They're designated by a colored level at the top or bottom of a bar. It helps identify a weak price level, which can be a possible end to momentum. Okay. Let's see here. These right here, you see them? See these orangish brown things that are plotted on top of the bar, and it extends a line to the right. Okay. See them here? Plots this at the top of the bar and extends to the right. Right here, plotted and extends. Plotted and extends. Those are called a paw print. They identify a weak area in the market, a weak price level in the market. Okay, and again, it can at times identify a change in momentum or a rejection or push away from that. You kind of see that, don't you? The market pulls back here and leaves one, and what does it do? The market shoots up, right? Pulls back here. See, starts to pull back. Nope. Hits a weak area, closes on down, goes down. Pulls up here, weak price point, goes down. You can see that all over the place. That's what a paw print is. Okay. Volume score. We're not going to dig into this a whole lot, but it's the number at the top of the bar. And it's not to be confused with OD, which we're going to talk about Friday. All right. It basically scores the strength of the bar, and a lower than 13 score is considered weak. What do I mean by that? Also, we do not take these into account for a TX trade, okay? But having a low volume score before trade is always an added bonus. So on your chart here, see these numbers right above the chart, okay? That's called volume score. That's part of order prints, okay? And you've got all kind of different numbers there. It's a very complex algorithm. It's basically scoring the battle within the bar, okay? And bars that have less than 13 seem to normally be a weaker bar, especially if right after the weak bar you have a reversal, and look what it does. Or right here, see that 11 is less than 13, a reversal bar, and see what it does. Okay? Do not confuse volume score, these little numbers, with what's called OD, or the oscillation detector, which we'll talk about Friday, but that's the big number up here, or that's this big number here, okay? Don't confuse them, all right? But we'll learn more about volume score in some other videos and trade setups, okay? As far as the different color on the volume score here, you're asking about, okay? Well, first of all, you've got positive numbers and you've got negative numbers, okay? When I say that less than 13 is a weak score, I mean less than positive 13 or less than negative 13. Anywhere between 13 and negative 13 is going to be considered weak, okay? But basically what we're looking at here is, let's say, down closed bar, right? This bar closed down. See that? So this is showing a negative 21 because it's giving a score for a down closed bar. So it's got a negative in front of it because it's a down closed bar, basically. Over here, these are up closed bars. Notice there's no negatives in front of them because it's an up closed bar. But then you say, well, wait a minute, right? Here's a down closed bar, and there's not a negative in front of it. Right, but see how it's orange? Because it's saying it's a divergent bar. Not to be confused with trend divergence, meaning this bar closed down, but there was actually more buy orders in this bar than there were sell orders. So even though there were more buyers overall in this bar, the bar ended up closing down because price got rejected. Buyers started to come in, and they couldn't hang on to it. Price wanted to go lower. So it's a divergent bar. But don't get caught up in that right now. We'll get into that in some other trades. Okay? But that's volume score. That's what that is on the chart. All right. So NQ walls or ES walls, Sometimes we call them lorry walls. They're noted with a cyan dotted line. These are historical levels where the market has made big moves. Okay. They're based on some ICR and TBS power trades from the past. There's some videos on that, but basically the market respects these levels very often. You've probably seen them on your chart. They look like this right here. See it? These cyan lines. And you can see over and over again how the market comes right to them, boom, bounces. These are already plotted. Market comes to them, bam, bounces right off of it. Comes back, bounces right off. Come back, bounces right off. These are very important levels in the market to be aware of and keep track of. If you see how often these levels hold the market and resist the market, and especially if there's other levels right on top of them, do you want to take a trade into that? Kind of like driving your car straight into a concrete barrier, right? Doesn't make a whole lot of sense when you see the barrier right in front of you. I mean, it's just dumb, right? You see look right in here. You see what do you see in here? You've got a ZOI, and we've got a deviation level, we've got an NQ level, we've got a mini magnet, do you see all those right there? Like, it's just a thick line. Do you see that? Do you want to take a trade going right into that, just smash into it? It's dumb, right? It's dumb. Don't do it. It's a huge wall. This first time you're coming down and you're coming right into some of these levels, or the second time you're coming down in some of these levels, do you want to keep smashing your head against a wall? Do you see how that would just be asking to take a loser, take a loser, take a loser? Loss, 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 right? Can you see that here? Do you have any heads up here? Hey, dummy, don't do it. Hey, you, don't trade into the smash wall. Do you have any clue not to do that on a blank, naked, blind chart? No. What do you think about those 90% of new traders that lose 90% of their money in the first 90 days? Can they see any of this stuff we're talking about? Right. Is it any surprise that when you're taking trade after trade after trade after trade into these walls and taking a loss, is it any surprise why you lose 90% of your money? Exactly. Okay. So putting it all together, you got all these lines. John, that was great. Cool. Thanks. I know what the lines are. What the hell do I do with them? Right? What do I do with them? Thanks, but okay, what now? Lines, great. Well, do you need to be worried about each and every little line? No. A single line is something you want to be aware of, but is not necessarily a wall or a level that you need to worry about. Okay? But some of these major walls and levels are made up of multiple lines. Now, this is a big area of confusion. You want to pay attention to this. Okay? So let me show you one of the biggest ways to use all of these. Okay? You ever seen this example? A single twig will break, but the bundle of twigs is pretty strong. Everybody understand that analogy? Right? Okay. What about this? You're walking down the sidewalk. There's a single layer of bricks right in front of you. Is that going to stop you or hold you up? You might have to adjust your stride and step over it, right? For a single line. You want to see that it's coming. You don't want to trip on it, but you can get over it pretty easy. You can walk over it and step over it pretty easy, a single obstruction line. But what about when something is stacked? Okay? And you've got a wall of bricks. You've got a line. You've got a row. That's not going to be quite as easy to get over, right? That might not be as easy just to take a step over. That might be a what? Obstruction. If you're walking, do you need to be aware of that? If you're driving down the street blindfolded, do you need to be aware of that's coming up? Yeah, because you don't want to trade going right into it. Let's look at some examples here. Okay, so right here, for example, on the left side of the chart, as the market's coming down, we already have this ZOI right here, right? Then it makes another ZOI. ZOI was already here. Another ZOI happens right there. It's what we call a ZOI crash. Right above it, the market prints a mini magnet. See that white line above it? Okay, so there's a zone of interest here. Bam, there was price rejection here. Market comes down, pulls up right back to the zone of interest. And what does it leave right here? A paw print. See that? Which was a rejection small price area. Do you see, guys, do you see that? There was an existing ZOI, a new ZOI, a mini magnet rejection, a paw print rejection. Do you think there's something going on in that price area right there? Do you think that's an important level to look at? Okay. Is that this one single little don't worry about it? Or is that more like this and you need to be aware of this right there? When you see them stacked up like that, you need to be aware they're right there. Right? What does the market do? It comes on down, and when it pushes back up, what does it do? To the tick to that mini magnet. It can't get through that wall. It did a run and couldn't get through that wall. Right? Now, for whatever reason, let's say you had a trade set up right in here to go up. Are you going to take that trade? Does it make any logical sense to trade going right into smashing your head into a brick wall? It does not, because you would lose your money there probably, right? Okay. What about over here? Notice right here, there's a ZOI. You see this little ZOI right here? And then it breaks it, and then right here it places another zone of interest right there at the same level as the last one. You see it, guys? Right there? And then what does it do? Right here, places a mini magnet. Boom, price rejection, leaving orders there, pushing off. Okay? And then, what does it do? Comes back up here, bashes his head against that area again, trying to get into that zone of interest. It can't. Gets rejected again by this mini magnet. Push off. So what do we have there now? Mini magnet, ZOI, mini magnet. Market pushes back up. It just can't do it. It just can't do it. Rejected and pushed away. You see that? And as the market's coming down, it's blowing through this single level, no problem. Blowing through this single level, no problem. Blows through, you know, kind of a little bit here. But what happens when it hits right here? Paw print, paw print, paw print, dub level, a stack. You see that stack? Boom. Comes down and it has a fight right there. What do you see right here? This yellow cluster. A lot of orders, a big fight, rejected off of it. You see that? So that is one of the big things we want to look at when we see these levels on our charts, is when they stack up like this. Okay, and something you're going to hear a lot about as you continue to go through boot camp is, nope, we don't take this trade, it's going into a stack. Nope, we don't take this one, it's going into a stack. Do you see how not trading into these stacks will save you loss after loss after loss after loss? Knowing when not to trade. Okay, did you ever take a loss by not trading? No, right? Come on, guys. There's 189 of you on the webinar. Give me a little feedback here. All right? You're not going to take a loss by not trading. Okay? Knowing when not to trade can save you more money than knowing when to trade can make you money. Does that make sense? Do I need to say that again? Yeah. Knowing when not to take a trade can save you more losses than knowing when to trade can make you in profit. Just because you can place some trades and get a few wins, but then you're just going, bam, bam, bam up against bad trades, you could lose more than you win, right? Okay. Yeah, you can't get run over if you're not playing in traffic. And yes, losses are far more crippling mentally than the good of a winning trade. Okay? So I know I keep harping on this, guys, but so many new traders are like, I don't care about all this crap, John. I don't care about levels and these resistance points. Just show me how to press a button. Yeah, and you're gonna press the button and go slam right into a brick wall. Get in your car, throw your family in there, throw your kids in there, go down the highway at 70 miles an hour and blindfold yourself and see what you're gonna smash into, risking your life and your family's life. It's no different here. You're risking your money and your livelihood and the livelihood of your kids and your family. It's not all about John, Daryl, Lori, just show me how to enter a trade. You have to know when not to enter a trade. Oftentimes it's more important to know when not to. Does that make sense? And if you can understand that part, I don't care about that. I just want to trade. I want to press a button and I want to get an arrow and press a button and get an arrow and press a button and get an arrow and press a button and get an arrow and press a button. Yeah, you want to. Guess who else wants to? 90% of all new traders. And where do they end up? Right? Okay. So let's look at some more. I mean, you see some of the differences here, right? You see some of these single levels that the market blows through, but then when you start to see some of these levels stacking up, and when you see the market coming back into those, boom, it can't go through, boom, it can't go through, boom. Be mindful of those areas, okay? Be mindful, okay? Randy, we're covering the basics here, buddy, okay? I understand. I'm happy to help you with that, but getting through the basics here is if somebody's starting brand new and obstructions, okay? And what we're looking for it to be a true obstruction, just to keep it simple, is a stack of 3, okay? All right. Leonard, I am at times. It's been a little while. Leonard asked if I'm ever in the room calling out trades because you're a great teacher. Well, thank you, Leonard. I appreciate that. I hope to be back in there soon. I'm just very, very busy on the back end as well. So let's see here. Dave, that if it's on the 60 or 240, I personally say yes. Okay. So guys, do you understand how when these are stacked up, you want to be aware of those? You don't want to trade into those. You're just smashing your head against the wall. Okay? Understand that? I mean, here's another perfect example. The market's just flying down, right? It can cut through these single ones, no problem. Cut through these single ones. But what do you see stacked up right here? You've got double mini magnets. I mean, what does the market do? Ooh. And it can't do it, right? And then we already have a deviation level right here. It plots a new ZOI. You see that ZOI behind that deviation level? Comes back down to the market, gets rejected, bam, pushes off of it, leaves what? Mini magnet right there. Comes back down to that level, bam, rejected. And it puts another level in that wall. You see it? Comes back down to it, bam, rejected. Comes back down to it, bam, rejected. Is it important to see that? to know that. Yeah, a new wall. And you seeing that that's there can save you so much money trading into it. Right? Now, something we'll talk about later. Would you want to trade off of them? Off of them? Off of them? Right? What about a swimmer? What does a swimmer do when they're swimming down, right? Get to the other side of the pool, and what do? They push off of that other side, right? It's that simple. Do you want to be the swimmer that just smashes right into that damn wall? Or do you want to be the pusher that pushes off of the wall? Using that momentum, using that, I mean, that's a very simple analogy, and some of you are like, this is very elementary. That's really what it is. Do you see how these are not just random, ridiculous levels that you shouldn't care about? You need to see something's going on there, and you need to see when they're stacked up. They're powerful. They're powerful to know don't run into them, and they're powerful to know push off of them. Right? Okay, well, I hope that part right there is helpful. So all through the sniper training, you're going to hear about when not to take trades. A lot of those review videos and session videos and trade by trade walkthrough videos, okay, they're all about, look at this example, should we have taken it? Yes or no. Look at this example, should we take it? Yes or no. Okay, and if you understand this part, if you get order prints and understand what's behind them and understand to look for those stacks, that's 90%. Okay, I mean, let me just pull this over here. All of these videos right here, mastering Xbox bonus videos. Oh, understanding levels and walls. Oh, trade session review. Dealing with indecision on levels. Oh, levels, walls, divergence. Oh, guess what, guys? All these videos you think, oh my God, this is so much, what do I do? That's what most of all of this stuff is. Yes, go through it, watch examples, but that is what most of these videos are, is going through and saying, what's in your way? Should you take this trade? What's not in your way? Should I take this trade? Does that make sense? I mean, guys, let me just, and we'll get to this in a second. I'm getting riled up, but that's so much of it. Like I said, it's about driving your car in a concrete wall. It's just as important, if not more important, to know when not to trade. Okay, it's easy to punch the gas pedal on the open road, but should you punch it? Is there a barrier in front of you? Blind trading. Do you think the 90, 90, 90 get this? Do you think that maybe those 90% of people that lose, that don't see what's in front of them, and all they're looking at is, did this particular indicator cross here, did this flip, and I'm going to take a trade, did this flip, and doesn't take long to blow an account, does it? Well, I don't care about all that stuff, John. I just want to get a little alert when it says, up, go short, up, go long, up, go short, up, go long, up. I don't want to learn your levels. I don't want to learn what's behind the scenes. I don't care. Call right now, close your brokerage account, have them wire you all your money and put it in your pocket, because you're just going to blow it, because you're going to sit there and find charts like this and put more and more and more and more indicators on them and have no idea what's even going on. Close your account now and stop trading if you don't want to truly learn. Right? Okay, so let's talk real quick here. Guys, I know I'm going long, and I know this is a lot of information, but are we good? Y'all want to keep going? Are we on overload yet? Okay, good. So in general, what is a TX trade? It's an exhaustion box with trapped orders on a reversal bar only. Okay, so let's look here. What do we have right here? What is the red thing? Exhaustion box, right? What do we have here? The blue shaded trapped order. Yes? So that, in a nutshell, an exhaustion box with a trapped order, okay? Meaning trapped with exhaustion, or what we call a TX, trapped exhaustion, TX. That's a TX trade, okay? Now, what about right here? This is an exhaustion box, right? See the green? And there's blue trapped orders there, correct? Is this a TX trade in and of itself? Who can tell me? I mean, it has an exhaustion box and a trapped order, just like this one. Correct, because it's not a reversal bar. The market is trending up here. This is a pullback in the market that gets rejected and trapped there, exhausted there, and then goes on up. That is not a TX trade. A TX trade is only on a reversal bar, meaning up close bar, reversal down close bar. Okay? Up close, up close, up close, down close. Down close, up close, reversal bar. Only a reversal bar. Okay? Does that make sense? Now, I'm not saying which one of these are valid trades. I'm just saying in general, what is a TX trade? It's a exhaustion box and trapped orders. Okay? And look, I mean, here's technically one on a reversal bar, right? Here's technically one on a reversal bar. Here's technically one on a reversal bar, right? They're all over the place, guys. Okay? There's no lack of, oh yeah, this is not one, sorry. Yeah, reversal bar, reversal bar, reversal bar. There's no lack of TX trades. They're all over the place, right? It's all about which ones to take and not take. Okay? But let's talk a little bit about what they are. Okay? I want to dig into this with you. Okay? Right here. Exhaustion box, trapped order. Exhaustion box, trapped order. Okay? What are they? Okay? What really is trapped orders and what really are exhaustion boxes? Okay? You know how they look on your sniper chart. We just looked at that, right? But how do they look on a pure OP chart? Okay, remember we've talked about this chart before, right? It's just purely the numbers and then the algorithm interpreting it. Now on this chart, they might be a little bit different color. Like, see these yellow shades right here? That's actually should be blue. Those are the trapped orders. Okay, just on my old chart here, they're a little different. Okay, but what's really going on in here? Notice here as the market's coming down. So the market's going down. These orders on the left are the number of orders that were sold. On the right, these are the number of contracts that were bought, right? Here, number sold, number bought. Number sold, number bought. Number sold, number bought. Remember when we were talking about some indicators being lagging and certain indicators not turning until several bars later, right? Remember how we talked about that? Or, you know, sometimes when you're a new trader and you're like, okay, I'm really scared, I don't know what to do. Okay, the bar went down, the bar went down. Oh, it's going down. Maybe this market is going down. I want another bar or two to confirm to me this going down because I need reassurance. Then I'm going to get in. Okay, I really think it might be going down now. Then I'm going to get in. How many of you have ever done that as a new trader? You wait and you wait and you wait. Need a little more reassurance, little more reassurance. I think it's really going now. And you got in. And then what did it do as soon as you got in? It's like, ha, gotcha, right? And you're mad because you know somebody's out there laughing at you, right? Because they're like, ha ha, gotcha, as soon as you got in. Check it out. And down, down, down. Okay, okay. I think maybe I'll get in. See some of these sell numbers here? 184 contracts, 75 contracts, you know, 89 contracts, 58, 78, 61. You see those contracts? Okay, maybe it's really going down. Okay, release me. Man, what do you think 90% of retail traders are out there doing? Okay, I think maybe I'll get in. Maybe I'll get in. Yeah, it's really going now. I'm getting in. Boom. 381 sold contracts. Boom. 180, 105, 137, 216, 222, 258. Do you see that big influx of sell orders coming in right here? You see it? Because what did you do when you were brand new? Ooh, well, let's wait. Okay, I think I'm feeling better. Yeah, it's going to go. It's going to go. Sell, 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 sell. All these orders. Do you see it? Do you literally see what I'm talking about now? Is there any light bulb that just went off like, oh? Also, what happened as these bars started coming down? What lagging indicators do you think flipped right about here? Or maybe some EMA crosses, or some MACD crosses, or some kind of indicator that flipped 4 or 5 bars into this pullback saying, oh, go short. Boom. All that right there is all those newbie 90% traders about to lose their butts. Do you see it? Okay. And then what happened here? Boom. Big boys, what are they doing? Oh, wait. There's a cluster. There's a fight. We got some buy orders coming in. Everything got totally rejected at the bottom here, right? Oh, we came in real strong, went way down. Boom. Look what's at the very bottom, 5. There's hardly anything down there, right? And then look, the buyers started coming in. Boom, boom. The big boys pushing the market up. So why do you think these last 2 cells right here are painted yellow? On your sniper chart, that would be a blue painting for a what? Trapped orders. Do you understand why those people are trapped? Because they were pushing down. Boom, we're going to go down. We're going to go down. Boy, you're trapped. We got you. We're going up. Do you understand what a trapped order is now? Trapped sellers, exactly. Is that a light bulb for any of you new people? I know that we have some veterans on this, webinar as well. But for any of you newbies in Bootcamp right now, does it like, oh, okay, there's really a reason behind those trapped order things. I get it. And do you understand? Let me ask you, even if this was your 4th day of trading, does that make sense right there? Why the big boys are trapping those new 90%ers, teasing them to get in. Oh, they're trapped. Let's go the other way. Does that right there, reading inside the market, make more sense to you of why you'd want to be able to see that? Or does this crap here make sense to you? Weight down, no weight up, no weight down, no weight up, no weight. Do you wonder why 90% are doing this? And the 10% are saying, oh, those guys are getting screwed. And when the big boys push this bar back up, where do I want my sniper order waiting? One tick above the close of this bar to ride it up with the big boys. Makes sense? So that's how that trapped order got created. Now see, there's an exhaustion box down here. And do you understand why it got exhausted? Because the sellers, all that selling strength came in and then just boom, died off. And the market went the other way. It's exhausted. So hence why we look to trade an exhaustion box with trapped orders. Does that make sense to anyone? Everyone? Strength came in, it was going up here. Strength came in, big orders, big drop off, rejected, going the other way. Do you see it? What about over here? Coming up, coming up, coming up. See these orders? Boom. 900 orders, 800 orders, 800 orders, 150 orders, and we go the other way. Rejected. Rejected. With what? Exhaustion box, trapped order. What else do you see up here? This yellow is actually a mini magnet. Boom. Push away with a mini magnet. Bam. See that? What is this green thing right here? Do you know what that is at the bottom? It's actually a paw print. Okay? It's just a little bit different color. Remember when I said, hey, a paw print shows a what? A low price level. A paw print is a weak price level. Remember how we talked about that? A point of weakness. Remember that? Well, what the hell does that mean? Look at it. Look at it right there in front of you. Do you see how that was a weak price level compared to all these other buy and sell price level, buy and sell price level, buy and sell price level? Bam. Weak level. Bam. Trapped sellers. Bam. Exhaustion box. Bar closes the other way. Pushing off that weak level. Pushing off that exhausted area. Pushing off that weak paw. This bar goes the other way. Do I want in on that? Yeah, I probably do. Guys, does that make any sense at all? Okay. Who is new having any light bulbs go off right now? Please tell me. I need to know if this is helpful to you or a waste of your time. Perfect. Okay. So again, up here, for example, and if we had some other indicators, we might see some divergence, but what happens up in here? Boom, exhaustion, huge big prices coming up, trapped orders. Look at this. See the orange? It's a paw print and it's a mini magnet all in one. Do you see that? All in one, push off of that. Do you want that momentum? Yes, Robert, exactly. Yeah. Do you want that momentum pushing off of all that? Absolutely. And you want to take that. I mean, do you understand why you want that? It's rejected. It's done. It's over. These guys, look at all these buyers. 861 orders, 922 orders, 812 orders. Bam, all the way down to 150, a paw print, a mini magnet, trapped, push off. Those people are SOL'd. Do you see it? They are SOL'd. Now, what do you think might have been happening in here? Oh man, market's going down, market's going down. All those newbies got in here and got screwed, right? And lost, right? Those 90 percenters? Yes? Oh man, I lost. Okay, well maybe it's going up now. Maybe it's going up now. I just want to wait. I just got screwed. I don't want to. Oh, wait, it's pulling back. Oh, I'm glad I didn't get in. No, wait. Oh, okay. Okay, maybe we're in a new uptrend. Okay, perfect. Now let's get in. Gotcha again. Boom. Yep, they're revenge trading, and then their stops are getting hit. Do you see it? That's trading right there. You know what trading is? Is the 10% hitting the 90%. What does Daryl always say? Do you want to be the target or be the sniper? Does that make sense now? That it's not just a little, oh, that's a great little gimmick. That's a great little saying. You're either being one or the other. Okay? So let's realize something here. And guys, I know we're going really long here. Okay? But I think some of this is helpful. Sniper setup number 2, the TX trade. Stop and think for a minute now that we went through that. Okay? What are we really trading with the sniper trade setup 2? We're trading exhaustion, rejection, and trapped in the market. Okay? Does that make sense? That's what you're trading. You're trading trapped orders combined with exhaustion, meaning you're seeing the mass herd crowd, 90% coming in, getting hit, getting rejected, the market going the other way with exhaustion and rejection, and you're following in that momentum. You're jumping in on that momentum just to get a couple bars out of it and get out. Like a lot of you didn't realize that. You're so focused on what is the rules for this trade setup. I've got this box, and then I got to press enter and trade. I got to press enter and trade. Remember how I told you earlier? I'm not going to teach you flashcard memorization today. I'm going to teach you how to do addition and subtraction so that you can get any flashcard. Does that make sense now? What you're really trading. You're trading order prints. You're looking behind the scenes. You're spotting weakness and you're spotting strength. That way you can trade that. When the market's exhausted, rejected, and bouncing off of something, you're getting into it to follow that. Because what do you want to do? Do you want to follow the 90% that's getting slammed, or do you want to follow the big boys, the smart money? Right? This is what you're doing. We're identifying weak areas in the market and we're trading it. A lot of you that even been through Bootcamp videos twice now didn't quite get that because it's so easy to get caught up in the little rules and the little this and the little that instead of stopping and going, this is what I'm looking for. This is what I'm trading. Okay? I don't want to get in at the top or get in at the bottom, right? I don't want to get trapped like that anymore. I want to take advantage of weakness, exhaustion, and rejection. I want to follow the market instead of fight it because I'm not smarter than the market. Okay? Also, I want you to check this out. And we're going to talk about this more Friday about taking that whole perception of rejection, absorption, strength, and weakness, and we can add to it the power of a trend. And I want to show you here a trend, a fake out, and then a TX. And I want you to see this and get this. Notice the market's coming down here, right? Makes a lower low, pulls up, comes on down. Pulls up, comes on down. Pulls up, comes on down. That's a downtrend. The market doesn't normally go straight from point A to boom, point B all the time, right? It'll come down, adjust, come down, adjust. So notice here as it comes down, it pulls up, and then what happens right there? What do you think? Exhaustion box, trapped order, bar closes back down in the direction of our trend. Is it a good idea to go with the trend or fight the trend? What do you think? Well, if I see that the market's trending, it's pulling back up, gets hit, stopped, exhausted, rejected, the buyers get trapped, and it starts going back the other way in the trend direction, do I want to take that? Yes, I want to. Right? Now what happens here? Oh, that was cool. All right, follow the trend. So the market goes down, market pulls back up a couple of bars. Oh, look, it closed back down. Let me get in and keep going down with the trend. Bam, hit you. Right? Bam. It hit 90% of people that are just doing regular trend trading. What did they do? Oh, we tried to go short. Haha, gotcha. Boom, boom, boom. But notice what was not here. But what was here? What was here? Exhaustion and trapped together, showing the combination of trapped, exhausted, done. Markets come down, pulled up. Markets come down, pulled up, done, exhausted, trapped, closed down. Now let's go. You see that? Oh man, I accidentally closed that chart. Do you think people trading blank charts can see that? Can the 90, 90, 90 see all that? Can they follow it? Okay. Just because they're looking at some 5-minute blank chart with these random indicators, they cannot see all these things. This is the secret weapon. This is the whole point of it. This is what separates your trading from everything else. Okay? Yeah, you're just guessing. Okay? Exactly. Mark says, I needed this explanation to give me more confidence in taking the trades. Makes it more than just a red or green box. Yeah, Mark says it makes it more than just, oh, that's a red or green box with some colored thing on there. Right. Now, you don't need to know how an engine works or a transmission works just to drive a car, right? You can still drive it. But it does help, right? It does help here to understand, hey, guys, this is why. I'm trying to give you a little bit of the why and what's behind it all. I'm trying to pull the curtain back a little. Let me ask you a question. Y'all got tired of me and you got tired of Daryl, and then you got tired of me on Monday telling y'all, go back and watch the videos. Go back and watch the videos. Install Ninja. The charts are important. The charts are important. Oh my God, shut up, John, about the charts. Just give me a trade. Do you understand now why your charts are so important? Do you remember me telling you these ninja charts are your life and blood? This is what makes you the money. This is why the charts are important. This is why you have to have it. Because of this right here. Now that you see what's behind it, you see that you're sitting here thinking, oh, maybe Apex has some killer special holy grail trade. Just teach me what to see and press a button. This is the holy grail. This is it. Okay, and if you understand what's behind it, like Dave just said, you can build some confidence in it. Okay, so all right, so real quick here, let's look at a couple things, and I'm going to try to wrap up. I know we've been going on here, so so let's look at some chart examples real quick of a couple things, and then we'll wrap up soon. I know we're going on and on here. And I know some of you have had to go, but I really want you to get some of this here of blind trading, okay? And now I hate doing this. These global crosshairs, I despise them because they're a pain in the you-know-what. But let's just look. I was doing some trading yesterday and some review with someone yesterday morning. About the morning session. So look at right where these crosshairs are, and let's focus to the left here on the 5-minute chart. Okay, if all you had was a blank 5-minute chart, I mean, do you see anything? I mean, if all you had was this chart and you're looking around in this area right in here, I mean, I guess you can see that overall the market's trending, but where is it pulling back? What is it doing? Like, what is really going on? And you don't have a clear picture. You just don't. Okay? But see, this is why I hate these crosshairs. Hold on, guys. Let's get back in here. But when you dig in here, what do we suddenly see? As we see the market coming up, comes down, what do we have right here? Xbox with what? Trapped order. Boom. Got a scalp trade of it, no problem. Right? We would have got in one tick above. Okay? Market goes up a little higher, pulls back. Not only does this leave a exhaustion box and a trapped order, also has a paw print there, which shows us what? That was a real weak area at the bottom there. Had another trade, right? I mean, you don't see, you don't see these things on a blank chart. Okay? Let's look at a couple other things here. I made a couple of notes. There was a few things I really wanted to show you here. And let's see here. Let's take a look here. Now, for those of you that, one quick little quiz question here. Let's say as the market was coming up, we took this trade. Say as the market was coming up, we took this trade. And then the next long here. Would that trade have won or lost? Somebody give me the time. Would we have traded that trade? Look at the time. Right. We don't trade 5 minutes before or after open, right? Okay. Let me scoot along here to the other time frame I was trading. It was around in here. Okay. Can anybody tell me what they see in this area on the 5-minute blank naked chart to the left? You see a bar. I mean, you don't know what you're looking at. Anybody see anything right here? Who could tell me what they see right here? Just in general. Okay, so as the market was coming up here, it pulled back. What did it leave right here? As it pulled back to this price level, it rejected that price and pushed off of it and left a what? Mini magnet, right? Then it came up, pulled back, and hit where? To the tick, hit that mini magnet. And then what did it lay? Do y'all see the orange? What did it lay there? A paw print. So you already had an existing mini magnet. The market comes back to it, leaves a paw print that means what? Weak area, has an exhaustion box, has trapped orders, pushing off of that. Do you want in on that? What is your confidence level in that trade, seeing and understanding all that, compared to this? Exactly. And then especially if there's no obstructions in the way, right? Yeah. Okay. Is that starting to make sense, guys, about why order prints is so important and where it's at? This is what we're trading. Okay. I mean, guys, I think I can get rid of this 5-minute chart, right? I don't think you need me to show you that anymore of like, come on, guys. You get it. You're just not seeing what you need or want to see there. It's not there. It's blank. And I don't think I even need to keep showing you these, right? You get it. The flippy floppy, it's just going to chop you to hell. Okay? You got it. What about last night? Were any of y'all on the webinar last night or in the elite room right before the webinar? Any of y'all get ticked off seeing Judah, Daryl's son, Judah, the 7-year-old, made like 350 bucks in the room trading with Daryl? Perry says, yeah, I almost quit. Yeah. Let's take a step back for a minute. Oh my God, how do you do that? Let's just stop for a minute. This was the market last night before the webinar. Okay? Is it hard to really tell that this is a downtrend? It's not really hard. And we're going to talk about trending and divert. We're going to talk about this more on Friday. It's not real hard. Okay? What do we know? When the market makes a trend, does it normally start at point A and shoot straight down to point B? Or does it normally come down, pull up, make a lower low, pull up, make a lower low, pull up, make a lower low, pull up, lower low? That's trending, right? We expect that, correct? Lower lows and lower highs. We expect that in a downtrend, correct? So the market comes down, pulls up, then it comes down even more. Okay, hey, there we go. That kind of helps confirm to me it's in a trend. It's made a lower low. It's keeping that. Now it's pulling back up. Some people taking their profits. Some buyers coming in. Bam. What happened right there? What happened? X box, exhaustion box, trapped order, closes back down in what? The direction of the trend. Boom. Okay. Pulls back up. What happens here? X box, trapped order, and a Paul, closes back down the direction of the trend. Boom. Just those two trades right there. Was that real hard to see why? Oh, even the 7-year-old last night took those two trades. Okay. Does that make perfect sense that in a trending market, it's going to pull back and adjust before it keeps continuing down? But guess what? We get to see right where that is because of order prints, because of sniper, because of what's going on behind here. Makes sense, guys? I mean, we can keep going and going and going through charts, but this is what the 90% don't get to see because they won't take the time to see it. They want to find some miracle indicator crap here, okay? And I know you're excited to trade and you want to start trading and you want to just press buttons. It's hard to be patient. You don't want to focus on this boring chart stuff. But this is where it's all at, right? So I know we were supposed to go over the enhanced TX trade today, but do we even need to? I mean, let's look at two of them real quick. It's an exhaustion box and a trapped order. Okay, but it also needs to have a mini magnet or a Paul. And it needs to come off an existing order prints level within a couple of ticks. Okay? It probably all makes more sense now. Right? Now that you understand more of order prints, the enhanced TX trade probably makes perfect sense to you. And does it make sense that it's going to be a stronger trade setup coming off additional order prints? I mean, let's look here. I mean, I think this was the one we actually just looked at earlier, or maybe it wasn't, but okay, market coming up right here, left a mini magnet. When the market pulls back down to it, What does it leave here? It leaves a paw print. So we've got our exhaustion box and our trapped order. So that makes it a TX trade. But it also has a paw print, right? So that makes it a what? An ETX trade. Okay? Right? So it's a trapped Xbox trade with a paw print pushing off of existing mini magnet and going up. Okay? Does that make sense? Now that you understand a little more about order prints, does it make sense why it makes sense? You know what I mean? Yeah, it's a springboard. It's a springboard. Okay? Let's look at another example here. Oh, my chart's not working here. Give me 1 second here. Oh, sorry guys. Looks like my PowerPoint locked up there. Sorry about that. Yeah, this was the one right here that we talked about earlier, right? Right off an existing mini magnet. Okay. So an enhanced TX trade is literally just a trapped order in Xbox with a mini magnet or paw printed on it, bouncing off of an existing order print plot. It's just springboarding off of it. Okay. I understand when and how do we pull the trigger. Willie, right here, you'd enter 1 tick above. Okay. Yeah, and it does have good DR, but remember with the ETX, we're not looking for DR. Okay. With the enhanced trades, we're not looking at all those other things. Okay. Those rules only come in with the naked. But yes, right, Randy. Added value. Okay. Is it okay if the levels are sticked on top? Yep. Yep, as long as they're within a couple of ticks of each other. It's fine if they're right on top of each other. In fact, I like it if they're right on top of each other because this mini magnet here rejected this price point. And when it comes back literally to the same to the tick level and puts a paw print there and rejects it again, I like that even better. That makes sense? Let me see here. Can I send you an OD question? Ron, yeah, you can send that to me. Also, we're going to be covering OD on Friday. Okay. No, Dave, just within a couple of ticks. Okay. All right. So, guys, I know we are, so all we're doing there with the enhanced is stacking the odds in our favor. Okay. And you'll never see any of this stuff without order prints. On Friday, in our next section, we're going to dive into naked TX trades. But guys, this is Apex Sniper. This is the whole point of Bootcamp. This is the whole point of Sniper. This is what you're trading. And if you learn to see this and read this, this helps you become the guru, not just follow the guru. Okay, not just random indicators. I think you understand that now. We're trying to truly teach you what drives the market and orders and volume and momentum and exhaustion, absorption. It's your true magnifying glass. So again, I hope there's some light bulbs going off. I hope this helps you. let me ask you this. Can you ever see yourself trading again without order prints? Like if there's anything else, I don't care if you trade your own little system or your own little whatever, you got to have order print. You can't trade it. It's like I don't care what car you're driving down the street, but don't be blind when you're driving. You know what I mean? Like you have to see what you're doing and where you're going. Okay? Guys, I'm rushing through these last ones here. I know I'm keeping you forever. Friday session. Let me send you the link right now. I'm putting it in. I'll get it blasted out, but I'm putting it in the chat right now. That is the link for Friday session. Now till Friday session, focus only on trading the ETX as far as what you're actually trading, like in the room tomorrow morning and Friday morning. Focus on these ETXs, demo it, learn it, master it. Be in the elite room in the morning and then be studying. Study order prints, study your charts, find these obstructions. Learn to mark on your charts when you see these things piling up and making you know, these levels. Like mark them heads up, like, hey, I got to keep an eye on that for when the market gets to that level. I don't want to trade into that. Okay, so learn that. Practice drawing those on there. Watch the 3 videos under section 8 if you have time to do that. Okay, and you should have plenty of time. We're all home, quarantine. What do I mean by that? Section 8, right here. Naked Xbox, trend range, these right here. Just watch some of these. Just watch these 3 videos because that's what we're going to cover Friday. We're going to get into naked Xboxes. We're going to get into trending, divergence. Rewatch this video as well. So Friday we're going to go through all that. And then we're going to have another tutorial on Tuesday. I'll get you the links for that. The recordings, yes. If you go to the sniper page right here, the recordings for these tutorials are going to be right down here under tutorials. Okay, right underneath the most recent webinar recordings, they'll be right there. So it's like I told you the other day, guys, we've given you a lot. We'll still keep putting effort in here for you. You got to put some effort into and learn all this. So again, today's assignments: focus on trading the ETX, trade those other things, watch those other videos. Do me a favor, guys. We've got about 500 people in trials right now. We had about 200 of you on this webinar. Okay? Are you glad you were on this webinar? Did it help you? Did it let you see things in a whole new light? Please do me a favor, because these other people need to understand. Please, as soon as we get off of here, like as soon as we get off, will you go in the elite room, go in the Skype rooms, get on our Facebook page, encourage others to watch these. Let them know that it's helped you, or that there were so many light bulbs, or it was eye-opening, or you never understood, whatever. I'm not trying to put words in your mouth, but please help us get this word out there that people need this. I hope you can see that, I wish I would have done. Some people are like, why don't you start with this instead of the other thing? Well, you had to have a little bit of basics before you can really get this. But I hope this helps you so much. And please, as soon as we get off here right now, please go in those rooms, Skype rooms, elite room, Facebook. Please just plaster it. I'd love to see all of y'all just posting that you got to get on here. This was great. Let's get everybody on here and help them out. So y'all want to keep doing these tutorials? I know my training style is a little bit different from Daryl's training style. That's why we're purposely doing this, to let you guys see both sides of the coin here. Okay? And so I'll keep planning to do some more of these, and we'll take things from a little bit different approach. Okay? All right, guys, thank you so much. Thank you for being on here. And we do have a webinar tomorrow night with Daryl, and then we'll do another tutorial like this Friday. I put the link there in the chat box. I'm going to go ahead and shut it down now, but please, 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 as soon as we shut off here in a minute, hop in the elite room, Skype rooms, Facebook. Please share your experience about today and encourage others, and we will see you soon. Thank you so much, guys. Have a great one. You're very, very welcome. Thank you for being interactive and being on and staying on for so long. So I'll see you in those rooms. Post for me. Thank you. All right. Bye-bye.